Hello, hi. Welcome to Vidya Vardhini tutorial, Chandrayapatna. My name is Kanchana. So yesterday we finished the first exercise. Today we'll start exercise 1.2. So before starting with the exercise 1.2, we'll start with a small introduction part. Now we have already understood what is GST, and we also know that what is input tax and output tax. Input tax is a tax paid by a businessman to the government which is recoverable. Output tax is charged on the final invoice price to the customer. That means output tax is charged by a businessman to his customers. Next, GST and value addition. GST and value addition is nothing but the GST is added to the profit gained by the businessman. That means every businessman pays GST on his purchases made by him and collects GST on goods and services from a customer. That is, every businessman pays GST on his purchases made by him or by him, which is an input tax, and he collects GST on sales of goods and services, that is output tax. The difference between GST collected and GST paid is deposit by businessman with the government. That is, you already know that whatever the GST paid by a businessman or a customer, it goes to the government. GST, thus tax deposit with the government is equal to GST collected from a buyer minus GST paid to the supplier. GST on sale price minus GST on purchase price. So GST on sale price minus purchase price is equal to GST on value addition. This ensures that only the value addition is taxed. Now let us see this with an example. The tax on purchase of X and a tax on sale Y. The dealer will pay Y minus X to the government. That is, for example, the tax on the purchase of some article is rupees 70 and the tax paid on sale is rupees 100. Then the dealer will pay 100 minus 70, which is equal to 30 to the government. Also, the tax liability on the dealer is output tax minus input tax. Tax on selling price minus tax on cost price. So, tax on selling price minus cost price is equal to tax on profit. This is called as tax on value addition. I hope you all understood. Please take the screenshot so that we can start with the exercise 1.2. Now let us start with exercise 1.2. Under GST, value addition refers to option 1 is cost plus tax plus profit. Option 2, cost plus tax. Option 3, expense plus profit. Option 4 is tax plus profit. Here the answer is expense plus profit, because under GST value addition refers to expense plus profit. Second question is, that is question number 1B. If the rate of GST is 18%, the GST the IGST for an interstate sale is dash. See, we already know that for interstate transaction means the transaction is between different states. That means if the transaction is between different states, then GST is equal to IGST. So IGST is 18%. Question number C. If a dealer supplies goods worth rupees 3,000 to another local dealer with 28% of GST, then the tax levied under CGST is see in the question it is clear that a dealer supplies goods worth rupees 3,000 to another local dealer with 28% of GST. See here the transaction is intrastate, that is the transaction is within the state. That means here GST is equal to CGST plus SGST since it is an intrastate transaction. That means here CGST is equal to SGST and CGST is equal to GST divided by 2. That means 28 divided by 2, which is equal to 14%. Then the tax levied under CGST is CGST is equal to 14% of 3,000. That means 3,000 into 14 divided by 100, which is equal to 420. Can we jump on to the next question? For a registered dealer, if the input tax is rupees X and output tax is rupees Y, then the tax liability on the dealer is. See, this we have already explained in the introduction part. Given that input tax is equal to X, output tax is equal to Y, then the tax liability is equal to output tax minus input tax, which is equal to Y minus X. Take the screenshot, we'll jump on to the next question. Question E. John sells goods worth rupees 2000 to Manish belonging to the same state. John gives a discount of 20% and charges GST is equal to 5%. Then John gets given GST is equal to 5%. market price is equal to rupees 2000, discount percent 20%. So discount is equal to 20% of 2000, which is equal to 20 into 2000 divided by 100, which is equal to 400. So 400 is the discount amount. Then the cost price is 2000 minus 400, which is equal to 1600. See, in the question it is clearly given that the John sells goods worth rupees 2000 to Manish belonging to the same state. That means it is an intrastate transaction. Then, since it is an intrastate transaction, GST is equal to SGST plus CGST. That means SGST is equal to 2.5% and CGST is equal to 2.5%. So SGST is equal to 1600 into 2.5 divided by 100, which is equal to rupees 40. So 40 is the SGST amount. Then CGST is equal to 1600 into 2.5 divided by 100, which is equal to rupees 40. Then final price, that is selling price, is equal to 1600 plus CGST plus SGST, that is 40 plus 40, which is equal to rupees 1680. This is the final amount. I hope you all have understood till now. Tomorrow we will continue with question number 2. So we'll stop here for today. We'll continue with the next question, that is question number 2 by tomorrow. Thank you all. Thanks for watching. Please do subscribe to my channel. Bye bye.